I'm going to give everyone 2 more minutes to join, and then I'll get started. Alrighty, just to be respectful of everyone's time, I'm going to go ahead and get started with today's webinar. Welcome. My name is Suhey Mojica, and I'm the Business and Housing Programs Manager at San Pablo Economic Development Corporation. Thank you for joining today's webinar on keeping track of your business. We will be discussing why it is essential to have a system for tracking the money that flows in and out of your business. What we'll be talking today about would be accounts payable, receivable, and using the balance sheet and cash flow projections. You will learn how these statements and reports can help you track the financial health of your business. Finally, you will learn about other accounting and tax resources. Today, we have 2 guest speakers. We will have Kanwar Singh, Chief Financial Officer for
La Clínica.
La
La Clínica.
La Clínica, and Shakay Smith, owner of the Bar Aesthetics. Before we get started, here are a few housekeeping items. This webinar is being recorded, and the recording will be available on our website at www.sanpabloedc.org. Any resources mentioned during the presentation will also be available on our website. All attendees are muted. If you are having issues with audio, you may need to click on the webinar screen to enable audio. We welcome questions, so please use the Q&A box located at the bottom of your screen. And today's presentation will be interactive, so please go ahead and type in your question and we will answer it live. San Pablo EDC is the economic development hub in the region. We offer workshops and training for businesses, workforce, and for future homeowners. We deliver a wealth of programs through a collaboration with other partners and innovative in-house programs. We offer technical assistance for businesses, membership and sponsorship benefits, access to capital, home ownership, job development and career counseling, degrees and certified training, and employment support services. San Pablo EDC is here to connect your business to resources that can help you start or grow your business. Whether you're a startup or an existing business, our resources will give you everything you need to succeed. We provide the training and resources you need to learn how to start, manage, and grow your business. As mentioned earlier today, we have 2 guest speakers. First, you will hear from Kanwar Singh, who is the Financial Chief Officer for La Clínica, providing tactical and strategic oversight in a number of areas. Mr. Singh has more than 25 years of healthcare executive and management experience, including senior finance roles at nonprofit entities and city agencies, including Lifelong Medical Care in Berkeley, Seneca Centers, Thunder Road, Access Community Health, and the San Francisco Department of Public Health. Mr. Singh is an active board member of organizations focused on independent living and economic development. He's an accomplished speaker and a 2008 recipient of the San Francisco Department of Public Health Hero Award. Mr. Singh holds a Bachelor of Economics and an MBA with a concentration in finance. Finally, you will hear from Shakay Smith, owner of the Bar Aesthetics. Ms. Jacquet is a multi-certified and trained in scalp micropigmentation, semi-permanent brows, and eyelash extensions. As a wife and mother of 6, Shakay wanted to be in a profession that she would enjoy and also allow her to be hands-on with her family. She is passionate and dedicated to ensuring that each client looks and feels their best as she enhances their natural beauty. And with that, I will turn it over to our first presenter today, um, Mr. Singh.
Thank you so much. Sue, I mean, it's a pleasure to be here and to be presenting. Um, One of the things I wanted to mention in the beginning of this webinar is that besides being a CFO and a financial person, I've also been a business owner. I've had businesses. I owned a chain of 7-Elevens, so just know exactly what people go through. So definitely, I understand the difficulties or fun of running a business. I want to make it an interactive session. So when I go through the presentation, I would like people to ask questions as I go along. So that, I'm not on the 10th slide and the question is from the first slide. So thank you so much. I'll go ahead and share my screen. Give me 1 second.
Great. Thank you.
You're welcome. So I just want to make sure people can see my screen, and I'll try to move those buttons to the other screen if I can. So can folks see my screen?
Yes, it looks good.
Thank you so much. So some of the, it's like some of the slides that I have been taken from the internet, and I will go through those. I put them together appropriately so that they can help a small business. Small Business Accounting 101. There are 9 steps to get your business on track. One, of course, when you open up a business, you go and open up a bank account. To open up a bank account, it depends on the kind of business entity you have. I will go over the kind of business entities in the next slide. Then number 2 is you track your expenses, which is the most important. So as you are selling products, services, you are tracking your expenses. In order to do that, you have to have a very good established bookkeeping system where you're logging in both your revenues and your expenses to make sure that you're looking at your bottom line, which is your net income. It's a good idea to team up with a CPA so that you have a good, well-established chart of accounts. And also the CPA can help you during the tax season. So then you determine how you'll get paid, set up a payroll system in case you have more than employees. If you have employees working for you, then you definitely want to have a payroll system. I would recommend going with one of the standard payroll systems, maybe ADP, or using if you are banking with Bank of America, they have an online payroll app, payroll link that you can use. You determine your tax obligations at the end, and also you want to keep on top of your gross margin. Next slide. There are 5 different kind of business and business entities, how you can incorporate your business, and it's very important. First of all, I would like to say at the get-go, think of business as a second some other person for all kind of accounting, business, tax, expense, etc., etc. So the business can be a sole proprietorship where you run the business as an individual owner. You don't incorporate it, you run it as a sole proprietor. So you need to do get your IDs, tax IDs and stuff, and you can file it as a Schedule C in your personal tax return. The second is a partnership. The C corporation that I would not recommend for a small business. I would recommend either a sole proprietorship, a partnership, or an S corporation. And then we have the limited liability company. So now getting into the accounting aspects of the business. Accounting definition. Accounting is how your business records, organizes, and understands its financial information. It helps to make good business decisions or to know whether you are winning or losing. So accounting of a business is really fundamental 101, where you need to do it on a daily basis. Again, I would like to emphasize on daily basis. You record your revenues, you record your expenses, and you have your accounts receivable, accounts payable in there. And I will mention that a little bit while I'm going through the financial statements, which are the next. So accounting is split into 5 business areas. There is managing your money. Bank or credit cards, always keep them separate from personal expenses. I'm sorry for a typo. That was personal side of the business. Don't mix personal with business. So definitely don't use credit cards that are for your personal expense and use it for business. Try to have 2 credit cards, 2 bank accounts, everything, keep it separate. Bookkeeping is recording and categorizing. Financial reports, the 3 critical financial reports, key financial reports in a business are balance sheet, income statement, and cash flow statement. And fourth is making business decisions. And then the fifth is prepping for the tax season. So let's go into the financial statements. And the most important financial statement is the income statement. Income statement always represents a period of time, like a month, a quarter, or a year. So income statement is over a period, as I said, and I'll go over the balance sheet next. Balance sheet is at a point in time. So those are the 2 important pieces that you need to understand. Income statements can be generated using the cash or accrual method of accounting. In the cash accounting means you calculate your profits or loss based on when the income and expense says hit your bank accounts. Accrual accounting computes your income based on when a sale was actually made, regardless of payment. So for example, if you made a sale and you did not get the cash for that sale, you record it as a revenue, yet it is a receivable in your balance sheet, meaning that if somebody owes you money, and that's when you have the accrual system. And that's what is explained in the following 2-3 lines. And then on accrual accounting is most accurate, but it can be big headache. And sometimes people want to do cash accounting, which is when we make a sale, we get the money, we record it as a revenue, and similarly for the expenses. So it's a choice whether you want to choose a cash accounting method or an accrual method. You can choose it and elect it when you are even um, using some software like QuickBooks or Quicken to do um, your accounting. So income statement, as I said, the income statement measures performance over a specific time period. The reports revenues first and then deduct any expenses for the period. The end result is equal to net income, which is your bottom line. People call it net income, bottom line, various terms are used. So net income technically is revenue minus expenses. So to get to net income, I'm going to showcase one of the simple sheets that I pulled out from the website. So what you see here is you see the revenues, and then you see the gross profit, then you see the operating expenses, then operating profit, and then you see the net income. And I'll cover these in the 3 sections. I will explain what the gross profit is, next the operating profit, and finally the net income. So let's look at the gross profit. So let's say if you have a revenue of, I'm looking at, this is a 5 years of income statement. In that, let's take a look at the first year. We have a revenue of 100,000 and the cost of goods sold is 70,000. And as it is, because you are selling the goods using credit cards of your customers, there is a credit card fee. So the gross profit is really the revenues minus the cost of goods sold. So like if you are into um, selling, let's say I would take a simple example of a store. It's a grocery store. You're selling your groceries, which are whatever you're ringing on the cash register, and the cost of goods sold is the cost of those groceries that you bought from various vendors, and that's your just the gross profit. That tells you that out of 100,000 of revenues, 73,000 is your cost of those stuff, and you're really making GP, gross profit, of 27,000. And a lot of times people call it just GP, another just an acronym for gross profit. Then we get to the operating profit. The operating profit is really then you take out what your salaries and wages are for your employees, you take out your phone, internet, website, and etc. You could have other expenses, just an example, some office supplies, advertising, etc. So the operating profit is taking the gross profit up in that previous. If you look at this is the 27,000 minus all these expenses, you get to 66,950. So you had a sale of 100,000. After you at the gross profit level, you came at 27,000. You subtract all these, you get down to 6,950. Now this still is not your net income because there are other things that fall in. And the next part is the calculating the total net income. And in that, you basically take out the interest expenses. So let's say you borrowed some money and you have to pay the interest on that. And then you also back out the income taxes. This is really your net income. That is the 1,980. So on a 100,000 sale, your net income was 1,980. So if you look at it, this is like 2% return on a sale of 100,000, right? Now, a lot of times when we go into, and I won't go into funding, when you invest into a business, you spend, let's say, 100 to invest to get by this business, you have to pay goodwill or you have to pay, etc., etc. You have to really look at what your return on investment is going to be. The return on investment can be based on the cash basis, that is cash on cash, the cash that you invested, or total return on investment. And for this, I don't want to make it more complicated, but I can definitely go into that if there are any questions around how to calculate the return on investment. So that's typically an income statement. Now, moving into a balance sheet. So that there are two aspects, and I'll try to cover the balance sheet and income statement in more detail. Cash flow is there, but cash flow takes it's like cash in and cash out. You're always calculating your cash, and it's an important third important statement. But I'll spend most of my time given on these two more important. Out of the three, I consider the balance sheet and the income statement as most important. Balance sheet has three areas: assets, liabilities, and equity. So the equity is what is really left with you after you take care of the liabilities. So asset is total worth, liabilities is the what you owe, and this is your real value in the business. Let's look at a statement.
Kanwar,
So, yep,
I'm
sorry,
sorry, before
uh,
we move
go
on
ahead.
to
Any
to
questions?
the
Sorry,
statement, yeah, we do have two questions.
sure, go ahead.
And you can either answer them now or we can wait. I don't know if you have
I
something
can
that.
answer them now. Let's
So
do that.
one question we have is, if it is the first time opening a business, when is it appropriate to open a business bank account?
Okay, great question. So when you open up a business, the moment you decide to open the business, you really want to go ahead and go to the bank on the first day of, like, because the checking account that you open with the business, and they will give you a checkbook, that should really be used to log in your all the expense, all the revenues should be posted in there, your expenses should be posted in there, and that you should do it right the moment you actually um, on day one. If I was to say day one, you should go to the bank and open up a bank account under the business. And in case you are doing it as a sole proprietorship, which is like the first way that most of the people open the business, I would say If you have a personal bank account, just open up a second bank account under your name only, but use it only for the business purposes. And if you till you get all the numbers in place, at least you are tracking your revenues and expenses in a separate account. Did I
Okay.
answer the question? Yep.
Yeah, thank
Mhm.
you.
You're
The
welcome.
second question we have, since we have the income statement up right now on the screen,
Mhm.
we have a question from a business owner, and they would like for you to please explain the depreciation expense.
So depreciation expense is definitely an expense where what happens is, let's say I buy an equipment, I have a restaurant and buy a big, let's say, oven, which will cost me $10,000. Now the $10,000 for that oven, the oven has a life, and that can be established based on the generally accepted accounting principles. It has a life of, let's say, 10 years. So you don't want to recognize that 10,000 as an expense to your business in the first year. You want to spread it over the 10 years. So the you basically recognize the depreciation, that it depreciates $1,000 over those 10 years. So really, it's the expense that you recognize in your income statement based on the full life of the equipment. And the reason is, otherwise you will first year, what your business will do is, if you did it the whole, you depreciated again the first year, or expensed it. If you don't want to expense it, you in the first year you use depreciation expense. But let's say what happens if you expensed it, you took that 10,000 as a hit, and your bottom line shows that, oh my god, you lost money in the first year. But the fact of the matter is, that equipment is going to last you over 10 years, right? So you want to definitely have an accounting book set up uh, with a with a uh, uh, with an understanding what you're going to be your capital, how do you capitalize your equipment. Some places capitalize everything over $5,000 over the life of the equipment. So let's say, for example, you buy a house um, for your business purposes, and you will, or a building, you got to depreciate over the length, which is 30 years or 20 years. I'm not sure whether it's 20 years or 30 years. I have to look it up. But similarly, for any large equipment, you don't depreciate small pieces like, office supplies or little things. So that's what the depreciation expense is for. So in this
Okay.
case, this place doesn't have any depreciation expense. But that's a very good question, and it's an important thing that we recognize. Mhm.
So for purposes of when you're looking at the income statement and the balance sheet, you mentioned, oh, you don't, for bigger purchases, right? You
Mhm.
don't want to expense it. And the reason why all at once is because if you are looking to get a loan from a bank, they will
Mhm.
take a look at that, I imagine. If it's better to depreciate it, because then your bottom line or your total net income doesn't, as you mentioned earlier, doesn't take such a big hit,
That's correct.
but makes you look better at a bank. A bank looks at it as a more profitable business.
Mhm. And
Got
it's the
it.
right way to do it too. And you have to have your um, policies, accounting policies, and I won't get into that. Small business generally
Okay.
doesn't put it together. So yeah, okay,
Okay,
all right.
great. Thank you. Those are the only two questions we had for now.
Thank you.
All right.
Those are good questions.
Mhm.
Moving into the balance sheet, I was kind of going over the assets, liabilities, and owner's equity. So assets are always, a fundamental rule of thumb is that total of assets is equal to liabilities plus owner's equity. So these two numbers have to match. There is no way that they cannot match. So that is our first fundamental. Assets is everything that we own, and liabilities anything everything that we owe, and owner's equity is after what you own minus you. Today, if I was to dilute everything, this is what I am worth. Owner's equity in this case is only 300,000. So one of the most important facts, the banks want to look at these two documents. Typically, it's the income statement and the balance sheet. They really don't care about cash flow. That's for your own operations. And here, this document is at a point in time. A balance sheet will always say this is my uh, this is my balance sheet as of April 11th or April 12th of 2023. It will never say the balance sheet is for a period of time. Always the income statement is a period of time. And the bottom line of the income flows into the balance sheet at the level of retained earnings. Okay. So if you make a profit at the end of the year, it'll go directly into your balance sheet and add into your owner's equity. If you have some loans, that will show up in your liability. If you have some in tax payable, accounts payable, and it'll show. So let's say you bought an equipment and you owed somebody $20,000 or $35,000, that'll show up here. Um, Receivable are on the other side. They will, here it is. So for example, if you gave somebody some supplies or some services and you were expecting money, that'll show up here. And generally, I would totally recommend getting some basic software like QuickBooks or something to do your accounting, because it creates all this on its own. It's very user friendly. It creates it. You don't have to be an accountant. You just have to, have a bank account, put in the bank account and bank account information. The cash that you put in the bank account will show up here on the first day. And then you can, and these are some of the things which are for a bigger place. Like you would not set up a petty cash. You can, again, it's your change fund. If you are running a business, you have a drawer in next to your cash register, and in the drawer you keep $100 at times to make change. That becomes your petty cash or something. So anyway, all I'm saying is that this is at a point in time, and is a very important statement for you to file your to go to the bank. So any questions on in so these are your this is your cash, this is your current asset, these are your current assets. Then there are long-term assets, which are your investments. Then you have the property and plant, which are again your long-term. You have your goodwill, you can recognize it, and that is your total assets. You can owe money, once again, tax payable, unearned revenue, wages payable, if you owe somebody some wages. And then these are your long-term. Let's say you borrowed money, and that should show up here. And these are your long-term liabilities. And then owner's equity is anything that is this 774 minus 474, and this is your owner's equity. That's it. I don't have anything more. I think I took enough time. I would like to ask for questions.
Um,
Anybody has questions?
yes, I think someone wants to know, can you explain a little bit more of what intangible assets mean, or what would those be considered on an income statement
On
or a
and
balance sheet, sorry.
and intangible assets on I'm sorry, where are you looking?
So at the bottom where it says investment, property, plant, and equipment, and then it says intangible assets and other assets. Like,
So these
yeah.
assets, these goodwill and these added together, trade
Mm-hmm.
names are intangible, that they only have like there's no real value. This is like you have created a value. So
Mm-hmm.
you say that your store is in the corner, which is going to be the best corner or street, and over the period you have accumulated clients and blah 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 whatever. So you have actually you've got a special trade name, and you put some value to that.
Okay.
That's really an intangible asset. I hope I am clear on that.
So it's not in a specific like
Yeah, it's
material asset. It's something that you are putting a considerable um, amount to it, or
hmm
a price to it, basically.
hmm
But you can't really touch it. That's why it's intangible.
yes, and the two together are to 305,000. So if I was to look at this balance sheet and I'll say, hey, you know what? The person has all these the assets here, the current
Hmm.
assets and investments, but then
Hmm.
he has the liabilities. He or she has liabilities. But guess what? The net worth of the business is only 300,000. So that is pretty much the goodwill that is, I mean, I'm just from this balance sheet, I'm
Right.
getting that. That is how I'm looking at it. That's really the goodwill or intangible asset that the person feels that he or she has created. When you're buying the business, you can say, hey, I don't think so. a fair number. I think if it's a you have a 5,000 customers, I would say it's about maybe 300,000 or 200,000. So that's why I call it intangible. It's whatever the person has recognized as the value for that business.
Right. So
Mhm.
like, like you mentioned, the the quality of their clients or something. It's something that you're just basing your own you think this is how much it's worth, but you can't really show for it because it's not
That's
land, it's not property, it's not an equipment. Um, okay.
hmm hmm
I,
Thank you.
I
That was
hope
a good
that
question. That was a good
I
question.
hope
Thank you.
that answers the question. Do we have any other questions before we move? Oh, and then there is another question, sorry. You mentioned QuickBooks. Are there other, you mentioned you don't have to be an accountant, so businesses, I'm sure, can uh, get help from an expert like an accountant or a CPA.
Mhm.
But and then like you mentioned, you have your checkbook where you keep track of what goes in and what goes out. But this type of software,
Mhm.
I imagine it makes it easier. Like
Yes.
you said, a lot of the statements, your bank statements, will then be downloaded into the software, and it makes it easier, and it'll take the information from there, I imagine.
Yes, and the way that these QuickBooks or some of the other packages, there's a zero, there's any software, and you don't have to be an accountant to do that. So you can kind of just buy it off the shelf, just install into your computer, and you don't even have to have these numbers. You can actually name the chart of accounts by the names like cash, blah blah blah, and automatically puts it. So there are these the chart of accounts. I would say it'll be appropriate to use a basic level accountant to just set up your chart, a bookkeeper to just set up your chart of accounts. So then the person will tell you how where to post your um, revenues and where you're posting your expenses, and balance sheet automatically gets created. So I mean
Hmm.
when and the I would say initially spending some time with an accountant, even though you have this um, off the shelf software, is also good. Now, if somebody who doesn't want to buy a software, does not have any of that stuff, as long as you're having a separate bank checking account, you're noting it down, and you're doing your bank reconciliations on a monthly basis, then you can actually go to a CPA at the end of the year and say, this is my rev. If it is a very simple, kind of business, you can have your all the revenues that you're collecting at the end of the day. Make sure you deposit into that account, any expenses that you have, and then you can charge it to that account. Now, what I really want to emphasize is that when you run a business and you have, like, let's say there is other income that you have, the business net bottom line flows into your tax returns. So it can be a help to you in case, let's say, you have these business, you're running buying a car which is used for business, and you can depreciate that on the business side. So there's a lot of advantages of having a business. So the net bottom line that you get on a business might not be the real bottom line from a cash flow purpose. That's why I always say that a cash flow statement is good. Um, you might have these expenses in there, like a depreciation expense. It's not a cash expense. It's really bringing down your the net bottom line. But technically, from a cash flow perspective, it's not bringing down your cash flow. So that's why it is important to know that. But yeah, going back to the accounting software, maybe I digressed a lot. It's
Hmm.
important to have whatever software you buy, just get an accountant to set it up in the beginning, and then log it properly. Or you can if it, and again, it all depends on the size of the business, and not knowing what nature of the business is, I can always maybe give you some insight into how you would want to do that.
Okay, thank you. And I
Mhm.
guess before we move to Shakay, there's just one last question. To prepare for taxes every year, what would be the best advice? Is it just having someone do the bookkeeping, do like the profit and loss statement every month, or like what would you recommend a small business do to prepare for taxes every year?
This is what you really want to prepare your income, a good income statement. Okay,
Okay.
a good, and because the bottom line of the income statement goes out into your, this net income is your revenue which is reported in your taxes, right? So what you want to do is make sure you record your revenues properly, expenses, make sure you have them, and even you can have them on I mean, honestly, depending on the size of business, you can even have them on Excel or something.
Okay.
Log in your revenues, log in your expenses, what your bottom line is, and then that becomes your revenues and expenses. And make sure you have your receipts. Make sure you have your credit card. Do not mix your credit cards. Have a separate credit card for business, and that can also work on your for taxes.
Okay. Thank you
Mhm.
so much, Kanwar, for such great information. I guess now we're going to have Shakay, our small business owner, provide some of our small businesses here today some of her best tips that have worked for her. So welcome, Shakay.
Hi, thank you. Thank you very much for having me. Again, my name is Chuck A. Smith. I am the owner of the Bar Aesthetics um, here in Pinole, California. And I just want to talk about, more of how my business and, excuse me, and what I feel like is my best practices that have worked for me. So it's just really starting off with a business. The first thing you want is, what are you going to name your business? And that's very, very, very important. Um, when you hear about first impressions, that goes with who you are, what your name is, and that goes from the name of your business to even your email, the look of your website. So you want to make sure that it is a professional name, something that can carry you across the board, something that you won't have to change later on. So make sure that your name is very, very professional when you are starting your business and you're thinking of a name. Because your business name is your brand, and branding is so important when you start your own business. The next thing is to have a plan of action. What kind of business are you creating? What do you want? And make sure it makes sense. Um, we as humans, we come up with so many ideas on what we can do, and there's so many things you can do as a small business owner, but have a plan together and make sure it makes sense. It's, yeah, again, there's so much to do, but you want to make sure it makes sense and why you're going into business. Is it to make money? Is it your passion? All those things are very important, but you have to make sure it makes sense. And that's forecasting and planning how much revenue you can make. Is it going to support you? Is it going to support your goals, your retirement? All those things need to come into play when you are thinking about starting a business. Another thing that works for me is education. Whatever it is that you decide to do as a business owner, make sure you understand and know that profession or what you want to provide inside and out. Because the best thing to have when you have a business and when you have a customer or a client, you want to know what you are selling inside and out. You want to know the service that you're providing, and that consumer wants to know that as well. When you educate your clients or customers about what service or product you are providing, what you're doing is that you're gaining their trust, and they will feel comfortable with you versus going somewhere else to buy or utilize your services. So make sure that you know what you are selling, what you are providing, as much as you can. Continue to do your research on it, be a master of it, because when you do that, that's how you gain more business, more clients, and that will help you grow. Passion. Passion is something that's very important. And I take it, very seriously. A lot of people are led by money, when it comes to a business. And of course, yes, you want money because you want to support. But think about this for a sec. If you are passionate about what you do, the rest will follow. So when I say that, I mean, don't let the money lead you into what in your business journey. Let that passion lead you, because the more passionate you are about your business, the more successful it will be. But if you're led by money, and if it's not coming the way that you want it or as fast, then you're gonna be like, you know what? This doesn't make any sense. I quit, I give up. So lead by passion, not by money, because if you lead by passion, the money's coming. That's an automatic thing, because the passion, the love that you have for your business will show, and that's how you grow. Another thing, just kind of a little piggybacking on what Kanwar was talking about, the structure, setting up your accounts. Those are very, very important. Once you figure out your business name, you want to set up your business and structure it as a business. And that's where you kind of got to put on a different hat. Setting up your bank account, even contacting the IRS. And these things are free. These are things that you can do. I know when I set up my business, once I figured out my name, I went on the IRS website. I immediately got my EIN, and then I went down to my my local county and got my fictitious business name. Then I went to the bank and I opened up my bank account, a separate account. And that is so important to do. You have to set up your account to keep your business and your personal expenses separate. From there, you want, and then figure out what kind of business structure you want to set up. Like what was mentioned before, sole proprietor, S Corp, limited liability, and those all depend on what kind of business you're providing. Me personally, I set up an S corporation because what works for me and my business. And I've been, and it's worked great for me. Kanwar mentioned QuickBooks. I have QuickBooks. That's how I set it up. I got a bookkeeper and they set it up for me, and it's the easiest thing to do. It's not rocket science. It looks a little scary at first, but once you have everything set up and you set your bank account to it, it automatically flows, and you have your chart of accounts and things go into the categories that you already have set up. And like you said, the balance sheet is already set up. So that I would advise anyone to go that route when you are setting up your business as well. Also, insurance. Insurance is so important. And I know there are a lot of small businesses out there that do not have insurance. That has to be an important factor into setting up your business. When I opened my business here, I've been in the cosmetology business for recently 9 years. I got my license back in 2003, but 9 years. And when I got my own place 5 years ago, I got insurance. And a year into having my own space, I had a huge flood here, huge. And it cost probably about $200,000. And a year into my business. And if I did not have that insurance, I would have been out of business before I really even got started. So factor insurance into your business. It's so important. You need it, you need it, you need it. Also, any licenses that you may need, whether it be from the health department, whether it be from the city, a business license, whatever licenses you have, make sure you keep those up to date. Those different entities, they can come in at any time to perform inspections, anything like that, but you just want to make sure your business is legit and it's straight all the way across the board. It's very important, not only to you, but also to your customers, them knowing that they are in an environment where you are licensed, trained, educated, you are organized, you have all your, you have your business set up professionally because you are a professional. Another thing that I also did was I developed a relationship with my bank. So if you use a bank, get to know the branch manager and your banker, because they will help guide you into how to build a relationship with the bank that will also help you to build business credit. And it starts off with utilizing the bank, having your account. After some time, you can go ahead and open up a business bank card and start utilizing that to help your business, but make sure that you keep it separate from your personal. But you will, just as you have a personal credit score, you also will get a business credit score. And that does help you along the way when you, especially when you're trying to grow your business. Once you get everything set up, set a budget for yourself, and don't be afraid to check your profit and loss statements. Don't be afraid to look at money. I know when I was younger, I used to do that so many times. I didn't want to look at my bank account. I know I was spending money, but I didn't want to look to see what I was spending. Don't do that. You know, set a budget, stick to your budget. If things need to be changed around, do that. But have a plan of action for your business, and stick to a budget as much as you can. When you are in your business, remember that you are providing, either it is a product or you're providing a service, but most importantly, you're providing a service. And I know for me, I like to, as a business owner, I think as a consumer. And what I mean by that is, when I'm here planning, dealing with my clients, how I think about how I would feel if I were to go into an establishment and how I wanted to be treated, and what is it that I'm looking for? What do I want to see when I come into someone's business? So remember, we're not doing anybody a favor. We are here to provide a service. I'm in the service industry, and customer service is so important to me. Even as I'm a consumer, if I go to a restaurant, if I go to a store, I am very big on customer service. And when I don't see it, when someone's not being very nice, I'm not going back, you know. But if I go into an establishment and I see them smiling, they care about their appearance, they care about the aesthetics of their place, they care about you as a client, as a customer, they care about the service they're providing to you, I'm a client for life. I'm not going anywhere, you know. And for me, I feel like I may not be the best brow artist out there, or the best scalp artist, or the best lash artist, but I have clients that have been with me for 8, 9 years. Why? Because we have established a relationship, and because I care and I'm passionate about what I do. So whatever it is that you decide that you want to do, remember that you are providing a service, and that service and how you put it out there is how you're going to receive it, and that's how you're going to grow, and that's how people are going to say, oh, go here. Oh, let me refer you to this person. She is this. She is amazing. She will treat you so good. That's what you want when you are developing, you're growing, and you're in your business. Service, service, service. Don't be afraid to ask for help. We want to be able to, we want to do everything on our own, but we can't. We're just one person. You need help. If you're going to need to hire an assistant, do that, because as you continue to grow, you're not going to be able to do everything on your own. So get someone that can help you alleviate some of everything that's on your plate, so you can continue being the best you. Also marketing. Marketing, that helps me out a lot, whether it be social media or paid marketing. Again, it's about growing your business, and you want to if you want to reach a broader audience, you're going to have to do some type of marketing. You can budget for that as well. Even if your budget is small, or if you don't have a budget, there's free marketing. Social media, it's free, or get your friends to repost whatever that you posted. If they can't be your client or be your customer, just reach out to your friend and say, hey, can you put this on your social media page? And a lot of them will say, yes, of course I will. Start there. But marketing, that's another key element to growing your business. Whether you have no budget, a little budget, or a big budget, it's just knowing who your target audience is, what exactly it is that you're looking for. And again, that goes all the way back to coming up with a plan on how you want to grow your business. I've been in this industry. I've had many different hats over the years, but I've been in this industry for quite some time. And I have to tell you, I absolutely love what I do. And of course, you can say, oh, I'm in it for the money or this and that. And it's like, I have a family, and of course I have to be able to help provide for my family. But I choose the things that I want to do is from passion. And when I do that, it doesn't even feel like I'm working. I'm here spending my day in a place that I enjoy being at. And my goal is to deliver the best service that I can and to make people happy. And when I make someone happy after leaving my business, I know that I've done my job, and there's no price on that. So I continue to educate myself so I can educate my clients, so they can continue to trust me, so they can continue to share and tell people about me, so my business can continue to grow and I can continue touching lives the best way that I can. So when you look at it and approach it from that standpoint, it's a win all the way around. You're enjoying who you are, you're enjoying your business, and you'll become successful and you'll grow.
Thank you, Shakay. That's really great information. I think you're very right in regards to a lot of small businesses thinking that they're alone and that they have to do all of this different things to run a business. But as you mentioned, there are resources and there's tools out there, and there's also experts that can help you, as you mentioned, like, you know, build a good relationship with your banker, find someone that can help you with your marketing find someone that can help you with your accounting, bookkeeping, all of your finances, so that you're able to focus on growing your business and providing that service that you mentioned. I think it's really important that all businesses understand, again, why they decided to be in business on their own. And that's why you see a lot of the successful organizations or businesses out there. You usually start with a business plan, right? Why am I doing this? How do I want to do it? When do I want to do it? And who do I need to assist me with that? And so just talking about that, it's very helpful to know who to reach out. Sometimes you build a network with other businesses too. As you mentioned, your clients come to you because you offer them what they're looking for in terms of the services that you provide. And the same thing, you as a business, when you're looking for someone to support you, it's the same thing. You want to work with those experts that are aligned with your mission in regards to your business and what you want to accomplish. And so I do thank you for all of that great advice and tips that you've provided today, because I think as you get busy in starting and growing and all the day-to-day tasks that you have to do as a business owner, you then start to lose focus and you start forgetting, like, I can actually ask for help. I don't have to do this all on my own. So thank you for that. And like I said, I don't know if you want to say anything before I move on to the next slide, Shakay.
No, I'm good unless anyone has any questions, or I can wait till the end, but no, I'm good.
No, I think yeah, I don't see any questions. I think you were very clear with a lot of the tips that you were providing. So, and based on, I mean, it came in perfectly because just like our slide that I have up right now, if you need help creating your business plan, San Pablo EDC provides a free tool called Dream Builder. And Dream Builder is a series of 13 online business courses. The goal of the program is to help entrepreneurs achieve success. So the courses are included in the program cover the basics of starting a business, as well as relevant topic areas such as marketing, finance, and accounting. In addition to the interactive courses, participants have access to helpful tools and templates. And then throughout the program, a business plan generator guides the participant in the creation of a business plan. And this is free. So anyone here in this webinar today, you can register by visiting our website at www.sanpabloedc.org Dream Builder. And then you find the Dream Builder landing page. We will then direct you to the Dream Builder portal, as you see here on the screen. And then again, I want to thank Kanwar and Shakay for providing such great information and resources today. If you wish to get in contact with any of them, please take this moment to jot down their information, or you can simply take a screenshot of their contact info. And I believe we've shared their contact information on the chat box as well. I know that we have another resource for today's presentation. So I encourage you to visit the IRS website. We will be adding the link in the chat. They have many workshops designed to help new business owners understand and meet federal tax obligations as well. And then I know that I don't want to leave. If anybody else has a question, we can have it answered now, or you can definitely email us and then we can direct it to our presenters today. Kanwar, do you want to say anything else before we? Okay, good.
No, I'm fine. Thank you. I just wanted to say thank you for inviting me to this session. And if there are any follow-up questions, feel free to reach me on my website and my email, and I'll hopefully try to answer them. Thank you.
Thank you so much. And so I guess before we end the presentation, we have like a quote here. So behind every good business is a great accountant. And then our next one is making good judgments when one has complete data, facts, and knowledge is not leadership, it's bookkeeping. So that's one of our quotes that we wanted to share. And we hope to see everyone next Wednesday. We have our next webinar on funding your business. Our experts will be the Small Business Administration and Working Solutions. We'll be talking to you about how to prepare if you are looking for access to capital, lending, or looking for funds for buying equipment or growing your business. And if you need any further information from today's webinar or for any future webinars, my information's here on the screen, as well as my coworkers, Jessica. So yeah, please definitely get in touch with us if we can be of any further assistance with any resources. And we'll be sharing the link to the recording for today and all of the different resources that we shared throughout the webinar today. So again, thank you everyone for joining, and also thank you so much for our presenters, Kanwar and Shakay, for their time and expertise.
You're
Thank you.
welcome. You're welcome. Thank you.
Welcome.
Thank you,
Thank you.
everyone.
Thank you for having me.
Thank
Bye.
you. Have a great day. Thank you so much.
Thank you.
Bye.